Hi, this is Jack from Alpha Charts with a state of the market video. Today is October 31st, 2020. Happy Halloween, everybody. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe. Okay, so rough week this week. So let's go ahead and make some sense of it. We're going to start with the SPX like we normally do. And so this is kind of what I'm looking at here. There's a potential for a double top here, right? This being the neckline. So I think that in the S&P, 32.18, 32.15, I think that is the really, really, really important level to hold. You'll see the red line right here. That's the 200-day moving average, which is right there. We'll call it 3,200. It's right there also. So I think that, you have a lot of confluence of area right here that really needs to hold. As you all know, we just went from, low to high, a 63% increase in the S&P. So some sideways motion in a range here would probably be, we'll call it constructive. And again, a likely scenario. I think the less likely scenario is a breakdown below, we'll call it 3,200. You may undercut this right to the 200-day or right near the 200-day, and then again just bounce around in here, working off this increase right here, and then be primed for a fresh breakout eventually. If you go below 3,200 in the S&P, I think that obviously there's a lot of space down here, and there's a lot of chance we go much, much lower. But I'm not in that camp yet. Price has to prove it for me. Next up, Qs. All right, so here's a Qs, nice, beautiful uptrend. It was shown kind of a cup and handle look. I'm more in now that this could end up being some sort of double bottom, right? You have the rounded. This could be more of a V-shaped double bottom potentially over here. One more pullback into this white space right here. Doesn't have to come all the way down, and then have the elections passed, and who knows if they're going to do stimulus or whatever the nonsense that they're talking about in Washington D.C. Whatever the reasons are, it's primed for that move to come back in here and then kind of V off this bottom. At the very least, back up to this, 297 to 300-ish range. That's the bullish scenario. And if you look at it, we're only in the Qs 3.5% away from that. So if you haven't sold yet, I would at least wait to see if that scenario plays out, as opposed to, because Monday could be ugly, right? Day before the election, a lot of uncertainty, a lot of people positioning for the election Monday and really into Tuesday. So Monday and Tuesday, you may be down here Monday and Tuesday, but you just moved from 300 down to 260. 10%. You just lost 10%, right? 12%. So is this really the time to sell down here? I would say if it breaks 260, maybe we could, you could consider selling. Don't like that it's underneath all these big time moving averages. The 200-day is still rising. So again, I think 260 is the line in the sand, right? As long as we're above 260, again, if you haven't sold yet, I'm not sure if this is the place you want to sell. This would be kind of like, the potentially selling at the bottom. Again, 260 is my line. We'll see. But that's the Qs. Looking at the IWM, which is just terrible. It was breaking out, then it broke back down, big gap down, and now it's starting to build out on the gap down. If it was inverse to this, it would look beautiful for more primed higher. This is a look that looks like more primed lower. This would be the first potential target, 145. Again, 149 is where the 200-day is, which is rising. So 149 could be a potential area. If not, this 145, 144 area. And then who knows what else. Again, it's just the weakest of the bunch and doesn't really interest me much right now. Looking at, let's look at RSP. RSP is kind of interesting. So RSP is the equal weight S&P, and it was down 0.32 on Friday. And it looks like it touched the 200-day and it's been kind of in this 200-day area. And so far, it's holding its 200-day moving average. So if RSP, the equal weight, can make a stand here, then I think that would be a very positive for the markets overall. If RSP loses the 200-day moving average and closes below it, I think that would be a very, very negative omen for the market. Again, a close below and a recapture the next day, I count it as a positive also. But if it loses in any meaningful way, this 200-day moving average, I think the RSP could be a telltale sign of more down to come in the broader markets, or I should say the cap weighted markets. So this is definitely one that I'm watching to see if this 200 holds. All right, so let's look at some general indexes. There's the XLF. It looks just like the IWM, actually a little bit worse because here's the 200-day right here. This looks like it may have a date at least to 2260, if not all the way back to 21 or so. We'll see what happens. Let's move on. SMH. So here's SMH. And it is holding at 65. So obviously you can see a little bit stronger than some of the other markets that we're looking at. And the 65-day EMA held strong here, and so far is holding strong here. That's another, I think, one to watch. Again, you have the false breakout right up here, came back, hit the 65, a bounce up here, very bullish scenario, a breakdown here. And I think you have a date with the 200 or even potentially this area right here. 151, 152, whatever. So we'll be watching this moving average, the 65-day EMA, to see if it could hold again, just like it did here and here after these pullbacks. Next up, let's look at lumber. What did lumber do? All right, so lumber broke down. We were kind of expecting it. We were watching the momentum divergence materialize, and it definitely happened. I use this as an indicator more than anything else, and it broke down this week. Pretty strong breakdown. Again, we'll watch it, see if it holds. 6250-ish. May come all the way down to the 200-day at 61. And then we'll see where it kind of finds its footing. That 200-day kind of makes sense. We'll see what happens. But right now, lumber is in a downtrend. Again, just a ominous omen for the market. SPX TLT, right? Are we bullish or bearish? Again, it's more of an indicator than it is, this ratio of trading. And, we pulled back, but as of right now, it's still made a higher low, right? So we have still in the higher highs and higher low frame. So if it can hold, again, in this ratio chart, it's 200-day in the ratio, that would be very, very bullish, right? If it loses the 200-day, 2020, we'll call it, that's what it is. If it loses 2020 and closes below there, and then takes out, 1966, then that would be for sure, the bearish scenario and more people heading into bonds and so on and so forth. But as of right now, it's a higher low in this ratio chart. Let's look at credit spreads. IEI, HYG. And I'm gonna get rid of some of these moving averages just to clean it up a little bit. Boom. All right, so IEI, HYG, and we don't need volume either. This has been the area. We had the false breakdown here, then a higher low here. So this short term, higher highs is an uptrend. But when we zoom out, higher low, I'm sorry, lower high, lower high, lower high, lower high, lower high, lower high. So this is a pivotal point for the, is this a short-term trend? Is this a change? and we make a higher high, that changes everything. We get, if it closes above 1.61. But if this kind of comes back down and we can either move sideways from here or break down more, I think that's the constructive piece for the market. So that's kind of what I'm watching, is what does the bond ratio look like? And that, I think that would tell us a lot. Again, if we get above this area, I think that is a big deal. All right, let's look at the VIX. Guess what? The VIX is elevated. Like, duh, right? I mean, that's just the way it is. This is where it got back in June, and then it retreated pretty easily here from there. So we'll see if it takes out, this $40 level, 41. The short term is in the uptrend here, but with the election, with stimulus, with all the nonsense going on, are we shocked that the VIX is elevated? No, not really shocked, and we kind of saw it coming when we plotted this line back then. All right, let's look at the gold. I know a lot of people like to watch gold. I don't really trade it because it hasn't been great for me. But again, if you were in 2018, it's not a bad run, right? From going from 110 to 190, it's okay. But I think that it's building a bigger base, and I think that this is starting to barring some kind of weird breakdown here, if this can round it out, I think you can have a potentially a trade going on in gold. So that's interesting there. And again, watching the gold SPX, because again, this is what I'm watching, and it's really another bottoming looking pattern, and it is building out this right shoulder of this inverse head and shoulder in the ratio chart. Nothing I'm interested in until or unless it gets above here, right? It's just a potential pattern until it breaks out. Once it breaks out, then we say we're in a position where gold is outperforming the broader market, and that would be something that we would definitely have to consider overall in that scenario. Let's look at the value line geometric index. And in the value line geometric index, let's just kind of zoom in a little bit. Obviously a strong pullback, so it's a broad-based pullback. Basically, this when the market goes down, everything gets sold, and that's kind of what's been happening. So this 440-ish level, that's the first, we'll call it, line in the sand. But wouldn't be shocked if there's a little further downside and we come and maybe close this gap right here, right? We don't have to come all the way down. Well, if we close this gap, that would be kind of interesting, right? And then we reverse from there. Maybe. I'm going to put a little mark right there, actually, now that we have it open. Like something like that. That could be an area of potential support. Little double top look there. But so, yeah, value line saying, it's been a broad base selling. We'll see. We'll see. You can make the case of higher lows, maybe. But that's that. Let's look up. Let's look at one. I want to look at the Amazon chart, and we'll close it down with Amazon. Huge run up, right? We're talking about a 115% increase in Amazon. Amazing. And now, is this a topping pattern, or are we in, again, another sideways consolidation within an uptrend? I'm just going to put the 200-day back in. 200-day is rising steadily. So as long as this 2,900 area holds, I think that that Amazon, is probably in a sideways movement right after this huge move up. I'm not uber bearish at this point. I don't know if you could tell that or not. I'm just not. I think the Qs are going to be super important. We have the this double bottom potential coming up here. People want to call this a double top. Well, the bears see a double top here. I see a potential double bottom because the 200-day moving average is still rising. So I think the lines are known, right? Again, we lose 260 in the Qs. You look at RSP. If we lose the 200-day moving average here, You know, you look at the SMH. You know, if SMH continues to come down into this range, those would be more bearish characteristics. But as of right now, you know, the selling has been brutal and has beaten a lot of people down. But now we may be close to a potential bottom. But again, for 3.5%, I'm willing to hold on to whatever longs I have left, and see what happens down here, because I'm already, you know, I already took my hits and my knocks that needed to be taken. Anyway, hope you all have a safe week. A lot of stuff going on this week with the election and everything. So you know your risk tolerance, know your time frame, and good luck. Take care.